evening, everyone. Welcome to another video by The Bottom Line. In today's video, I am going to cover a very important chemical stock which I recently have found interest in, and I've recently found this company to be very good in terms of profitability, in terms of performance for the past few years, and most importantly, the valuations around it. So, broadly speaking, this is a company which simply uh, creates boric acid uh, and borax plants, right? And this is only it does not have a lot of presence around the country, but it is broadly able to publish, or rather broadly able to produce quite significant in terms of the chemical composition. So if we see this company creates a few products, out of which boric acid is one of the top ones, and technical grade powder, IP grade, and then there is something very important which is lithium hydroxide monohydrate, which is basically used in electric vehicles, which I see as a very good highlight point here in what the company is doing at this point. In terms of the finances, it looks very good. If we look at the finances of the company, first of all, in terms of the peer comparison, if we see, we have a industry P of close to 32 for this. This is a chemical industry. We have Pidilite and all the big players around here, and we have Indoborax, which has a chemical composite, which has a P ratio of only 11 as compared to the industry average of 39. So the industry P variance is also significantly high, which makes it a very attractive valuation to have. If we look at some of the numbers, we have consistent sales growth, we have consistent operating profit margin growing. A very important number in OPM that I see is that the OPM percentage has significantly risen in the past few years, especially if you look at this bracket of 5 to 6 years. The OPM has grown significantly. What that indicates is they are being able to price, and they are being able to sell at that price without any market pressures. If you look at it, actually it's a relatively small company, right? Only close to 507 crore in market cap, which is very small. It's basically a small cap, right? If we look at the balance sheet, one of the biggest highlights of this is look at the borrowings. I personally love it when the borrowings are zero and it's a small cap company. I'm very watchful on this particular item, and I see this as a threat to the company's growth if at all they start taking up more and more borrowing, because it will eventually eat up into their profits, and eventually if there is no profit, there is no share price growth. As simple as that in terms of fundamentals. If we look at the assets, the cash equivalents are good at 98 crore. They have been growing for the past few years, so they are holding good amount of cash, which is also a good thing. Inventories are also significantly growing, which is also a good thing. Again, no short-term loans, one of the best things about this company. If we look at the cash flows, except this 1 year of negative cash flows and this one, most of the times we have had positive cash flows. Even if we look at why these negative cash flows have happened, you will see most of the negative cash flows are because of some investment, sale and purchase, which is not a worry at all. The same thing goes on for March 2021, investment and purchase and sold. The same thing. The fixed assets purchased are 11 or worth 11 crores here, 2 crores here, and 5 crores here. So they are also taking growth up with this fixed asset purchases, which basically adds on to the production of the company. But apart from that, all the negative cash flows are only because of this net figure, which is investment sold and purchased, right? So I'm not really worried about that because I do not consider that as a core cash flow activity. In the ratios, the only top ratio I really look at is ROCE. I do not call this a great ROCE, but it's okay-ish, significantly okay as of now. The biggest highlight, which I generally like, is if I have found a stock, a company which is not yet noticed by the FIIs and the DIs. The moment it gets noticed by the FIIs and the DIs, the inflows are bound to come, right? Because the FIIs and DIs are not really investing in every single stock that they see on the market and control it, right? But this is one stock that I believe is going to eventually get attention from both FIIs and DIs. At this point, there are no FIIs, DIs inside it. It's almost a negligible share in it. If we look at the promoter share, it is pretty clean. I do not see any shell companies. I do not see any outside organizations that are holding the share or have a controlling stake in it, and the percentages have increased in the past. So the interest of the promoters in the company is also pretty much intact. In public, we have various items, but this again, it can be a mix of any number of people. But as a highlight, the FISDI is not having any interest at this point. Personally, I think when this I see as zero and I see a fundamentally good company with no borrowings, I see this as a gem for myself to look into and invest into. If we have to look at the technicals of Indoborax, then it has been listed in NSE only in March 2022, but broadly, this is trading view, by the way. Broadly, if we see, I see this as a potential potential support zone, a potential good price, and all these smaller levels also I see as potentially good prices where I will try and look to reduce new positions. Again, this is not a recommendation for you to buy or sell. I'm only stating what my plan is, how I see the charts, and what I see in the charts as probable levels from where we could see a bounce, we could see some sort of retracement back to higher levels. And obviously, I think more than the charts, I am more relying upon all this information, which is the key and the strong fundamentals of the company, right? And fundamentals is something that's public information. You can view it on annual reports, you can view it on any other website you like, Money Control, Screener, whichever preference you have. With that, I think that's all I wanted to cover. It's a very, very strong small cap chemical company in my opinion. As long as it continues with the same growth, I do not want to see the borrowings increase. That makes me really uncomfortable when the borrowings increase when you're such a small company. So growth has to happen on more equity capital is what I believe, and that's what I believe was also in the annual report of the previous year, that they do not plan to have any new debt injections into the company. With that, I think that's all I had to cover today. Until I speak to you next time, I wish you good investing and good luck. Bye bye.